Startup financial planning is essential for entrepreneurs looking to build a successful business. It involves developing a detailed financial strategy that supports the startup during its initial phases and beyond. Effective financial planning aids in budgeting, forecasting, and cash flow management, ensuring the startup remains solvent and can meet its growth targets. Understanding financial planning. 1. Assess financial needs. Evaluate the financial requirements of the startup. 2. Identify funding sources. Explore various options for funding the business. 3. Set realistic targets. Establish achievable financial goals for growth. Key components of financial planning: budgeting. Establishing a budget to manage expenses and allocate resources effectively. Forecasting. Projecting future revenues and expenses to anticipate financial needs. Cash flow management. Monitoring cash inflows and outflows to maintain liquidity. Funding strategy. Identifying potential funding sources such as investors, loans, or grants. Creating a financial model. Revenue projections estimate future sales based on market analysis. Expense estimates. Calculate fixed and variable costs for operations. Cash flow analysis. Assess inflows and outflows to ensure liquidity. Funding your startup: bootstrapping, using personal savings or revenue generated from the business. Angel investors. Seeking investment from wealthy individuals who provide capital in exchange for equity. Venture capital. Attracting investment from firms that specialize in funding high-growth startups. Crowdfunding. Raising small amounts of money from a large number of people, typically via online platforms. Managing expenses. Track expenses. Use accounting software to monitor spending and identify cost-saving opportunities. Prioritize spending. Focus on essential expenses that drive growth and avoid unnecessary costs. Negotiate contracts. Work with suppliers and service providers to secure favorable terms. Financial metrics to monitor burn rate. The rate at which a startup is spending its capital before generating positive cash flow. Runway. The amount of time a startup can operate before needing additional funding. Gross margin. The difference between revenue and cost of goods sold, indicating profitability. Adjusting your financial plan. Review. Regularly assess financial performance against the plan on a monthly or quarterly basis. Adapt to changes. Be prepared to modify the financial plan based on market conditions or business performance. Seek professional advice. Consider consulting with financial advisors or accountants for expert guidance. Conclusion. Importance of financial planning. Essential for sustainable business growth. Key components. Understand components for effective planning. Regular monitoring. Track financial health for long-term success.